Hey traders, Nick here on Monday afternoon. So we've had a couple of green days, some few developments over the past few weeks. If you're a paying member, you've heard me say this over and over. In the past 5 weeks, the first 2 weeks, we were looking for something very specific, which was stabilization. We got it. The next 2 weeks, we got some progress, especially last week. 2 weeks ago, and last week the goal was to retain as much of that progress as possible. So if you're a paying member, you've heard me say that 1,000 times. So this is off to a good start, maybe a little bit too good going into earnings, because the reaction to earnings is not the quality of the report. If you want proof of that concept, all you have to do is look at, say, Apple in the last, 5 years. How many has it popped on the earnings headline, like overnight, and how many dropped? And I bet you it's 50-50, if not more down than up. And so does that indicate that it had 50% of its reports bad? No. All of the reports were great. It's just the expectations. What are people expecting? So I don't like to build up the expectations into the earnings. Microsoft starts tomorrow afternoon. Netflix set a good tone with regards to reaction to headlines. I don't care about the quality of the report. I have no doubt Microsoft is going to deliver something nice. How nice relative to how much expectations there are. So, building up steam ahead of earnings scares me a bit, but let's talk about the price action all by itself really quickly. And this is the point of this video. Just a checkpoint for those who are not members, to give you an idea what professional traders do. They line up the price action ahead of time, and they know what to do if this happens or if that happens. We don't forecast, well, at least I don't. I'm not telling you it's going to be that point in this at that point in the future, but I'll tell you what happens after the next step and what is likely and where are the triggers and where I would buy dips and where I would short rips. So for example, here we're making progress that technically would have a target up here on a daily basis. This is not a tricky chart. This is the SPX, which is the index S&P. There's nothing fancy on here. Everything on here is automatic to show you support and resistance. So a breakout from here, target-wise, would launch you into here somewhere. So in that process, you would trigger this one, which has a new all-time high target. So it shouldn't be that easy, correct? So it sounds a little bit too easy. So my plan is, if indeed it is too easy and somebody reacts negatively or some headline comes out or some GDP expert tells you, oh my God, blah, 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 and we drop, if we're holding support levels, I would want to buy this drop into those support levels and stop out if it doesn't work. So instead of panicking on the drops, I'm running to the fire and see if there's anything to it and if there's anything worth catching into support. Why? Because I want to catch the second attempt at the breakout. Okay, so the likelihood of losing the support that we got in December and the one in October with these set of headlines is very small. This set of circumstances does not warrant losing such hardcore bounces, technically speaking. So something has to come out of nowhere. And I'm not meaning like some Fed head I don't want to cuss, some Fed head saying something like, oh, we're going to continue raising, blah, blah, blah. That's the same headline that we've been chewing on for a year. Something new. I don't know what it is. So that's why they call them black swans. You can't plan for accidents. We need a new accident. And hopefully it doesn't come. So the bulls are in charge. On the daily chart, they made progress above prior fails. This is huge. But that's not the all clear to get long for everything. If you're long, you can stay long. I would book profits and reload later, leave some runners on. But usually when somebody breaks out, they come back and retest the footing from which they broke out. So the dip tomorrow and the day after, maybe on Tesla, I would catch it into these supports in order to come back and tackle wherever we fall from. Let's say we rally a little bit more and then we fall by Wednesday and we come back up. That would be pretty exciting. Imagine me having this video on next Tuesday talking about these two. What? Yes, so today we're talking about these two. What if we're talking about these two? If we take these two out, this one from way back in September would be next. And then this one. And then, the descending channel is broken. So we've been dropping for a year, consolidating for a few months, and we start making headway, little headway, 1, 2. Now suddenly we're making higher low, higher highs. So we made a bowl. We dropped for a year, we went sideways for months, and now we may be climbing for a few more months. But this is putting the cart before the horse. First, confirm this breakout. Second, see if you can get this one done. And then we'll have another conversation. Shorter time frames, I would expect some downside. Today was too happy. It closed within the range that I was okay with, but another drop. Now, if they lose this support from the last few days, we will come back down and test this. Losing this will be pretty disappointing because that puts you back. Will be somewhat normal price action, but disappointing. Head and shoulders targets will be down here, and it will be just a different conversation altogether. I will try to catch the falling knife into this support and this support and this support and this support and this support. And these are tactical trades. I try it, it doesn't work, I get out. I try the other one, it doesn't work, I get out. I try it, it doesn't work, I get out. And if I can't do any of this, when the indices fall, there are stocks that fall faster into reasonably good supports on their own. And I share these almost every day with the members. Hopefully this sheds some light. The bulls are in charge for the short term. And there are a couple of time frames, I'm not going to mention them here, where the bulls are completely in charge. So the bears better be aware of those. But it can go either way. However, the talking points for the bears are going away, and they're stale. So they need a new accident in the headlines. I don't listen to headlines. So you tell me what's the headline, the next headline is going to be. They're going to make one up because nobody watches CNBC if there's no drama going on. So if there's no drama, they're going to take a little issue and blow it up out of proportion in order to get advertisers so you can watch. That's it. It's as simple as that. They're not evil, but that's how they make money. They make big mountains out of bumps.